Live from Sydney, I'm Paul Allen. This is Inside, where we dive deeper into the stories that matter with crucial context and sharp analysis. Well, in just 1 hour, sweeping new US tariffs will kick in on 60 trading partners. The duties targeting so-called forced labour practices will replace Trump's temporary 10% global rate. Claire Reade, a former assistant US trade representative, is joining us ahead to discuss the possible legal challenges to Trump's latest attempt to rebuild his tariff agenda. Asian stocks and bonds are under pressure as surging oil prices deepen a tech-led sell-off. Investors are increasingly questioning returns on AI spending. Indian Prime Minister Narendra Modi is seeking to calm outrage over exam leaks as student protests grow into a major political challenge. And as Cambodia's economy grapples with higher fuel costs, US tariffs and weaker trade with neighbour Thailand, we'll speak exclusively with Deputy Prime Minister Sun Chanthol. And our top story today, President Trump's biggest move yet to rebuild his tariff wall. The US slapping duties of between 10 and 12.5% on imports from most major trading partners. This is going to take effect in about 1 hour. That's 12:01 a.m. New York time. Now, it follows an investigation into the alleged failure of about 60 economies to prevent forced labour in their supply chains. New Zealand, which is facing a 12.5% tariff on its goods, has protested the move, among others, saying the forced labour allegations are not credible. It's been a similar reaction in Australia, which is also facing the steeper tariff, with Trade Minister Don Farrell saying in a statement that the levies are unjustified. Well, let's get to insights now with Claire Reade, senior counsel at law firm Arnold Porter. She previously worked in the Office of the United States Trade Representative. Claire, thanks so much for joining us today. And, just to echo those comments from New Zealand's Todd McClay, it's just not credible, he says, that forced labour plays any measurable role in New Zealand's economy. Other economies would be arguing the same. So what proof is the Trump administration offering that this is a problem?
Well, the Trump administration had quite the job to do to try to analyze 60 different economies in this regard. And I would say that it did not provide maybe what Sherlock Holmes would think was a perfect set of evidence. The statute requires the finding of an unreasonable act by a foreign trading partner that has an adverse effect on U.S. commerce. And what the United States is saying is that its approach to opposing and combating forced labor uses a specific law with enforcement mechanisms and proved enforcement. And it's saying that it is not seeing this in other trading partners, and then saying that to the extent that other trading partners have forced labor related products in their economies, that this is a disadvantage to U.S. business. Now, that set of assertions is not always backed up by very concrete evidence, certainly not across an entire economy, and certainly not as it is not as credible, I will say, for advanced economies, which actually are trying to combat this practice. But that's where we are.
Well, the Supreme Court overturned the previous set of tariffs from the White House. How legally robust is this new set of tariffs?
Well, the new set of tariffs operates under a different law. The other law that the Supreme Court overturned, it was a quite straightforward question. You looked at the text of the law and asked the question, does it authorize the president to impose tariffs? And the answer under that law, which was called IEPA, the International Economic Emergency Powers Act, was no. Congress had not given the president that power. But under this separate law, it's very clear that the president does have the power to impose tariffs. There's no question that he does. So the question is a more complicated one, which is, did he follow the rules in the statute that must be followed in order to justify imposing the tariffs? And that's the question of, is the practice unreasonable by the foreign trading partner, and is it harming U.S. business? Now, I will tell you that U.S. courts are very reluctant to interfere in what they consider to be foreign policy matters. So there's going to be a lot of deference to the president under this law, given that it's very clearly stated that he can impose tariffs if he meets the law's rules.
Does the United States reach the same standards on forced labor that it's accusing its trading partners of failing to reach?
Well, the United States structured this investigation using its law as the gold standard. The question of how well we enforce our anti-forced labor provisions is probably a matter of judgment. It is the case that action has been taken at the border, but I can't really judge whether our government is doing a better or worse job than other governments are doing, or whether it faces more difficult problems than other governments do in this regard. I don't know.
Now, China often uses or pulls levers like inspections or updated standards or the like to conduct trade strikes against other nations, and Australia was a case in point in the early part of this decade. When you look at this tactic from the Trump administration, does it look a little bit like the tactics that China sometimes employs?
Well, I think the administration, the U.S. administration, has made very clear that they want to have tariffs on the rest of the world for perceived injuries. And they seem to be trying to make use of whatever tools they have to ensure that tariffs are placed. I think it's particularly tricky when you're dealing with an issue like forced labor, where it is an issue that everyone would agree is a bad practice. And so no one wants to be accused of tolerating it. And the standards for accusing another trading partner, you would think, would need to be very carefully thought through. But this administration is very interested in ensuring that it has tariffs on its trading partners and using them as leverage. So I think the politics of what's a seemingly very efficient approach to getting those tariffs back on may have tempted the administration into going down this path.
Okay, well, if, as you mentioned, it's more challenging for the Supreme Court to overturn this set of tariffs, what can impacted trading partners do besides just registering displeasure? Can they go to the WTO, or is it more likely we would see reciprocal tariffs?
Well, they can go to the WTO. They certainly can. And there is a process at the WTO for settling disputes. The only problem is that the process is a two-stage process. So the United States would be required to participate in the first stage, where you have a panel that decides whether the action is justified or not justified. But then, even if the United States lost, there's a problem in the WTO system right now, because the appeals process is one that is broken. So the United States would be able to avoid any consequences from a loss at the first stage by starting an appeal that can't actually be completed, so everything becomes frozen legally. And in terms
I guess
of
there is another option
tariffs,
for. Claire, sorry to interrupt, but we're running out of time. I just wanted to ask you about one other option that trading partners might have, and that is, of course, just to do nothing, run out the clock. This administration ends in 2028. Can you see the global trading picture looking a bit different after that?
Well, I think that's a very fair point, because countries know that if they start a tariff war, the cost benefits of that the costs of that probably outweigh the benefits in many cases. So it may be that that's exactly what countries are going to try to do, to basically try to get as good a relative competitive position as they can in terms of trade with the United States, and try to modify the tariffs to the extent they can with the Trump administration, and then wait it out.
All right, Claire Reade, Senior Counsel at Arnold Porter. As the clock ticks towards midnight in the US, when those tariffs get put in place. Thank you so much for your time today. All right, let's take a look at how markets are performing around the Asia Pacific. We're focusing, as usual, quite often we do, on tech, and it's been a bit of a rough day. We've got Intel shares jumping after the bell. Its revenue forecast shattered Wall Street estimates, indicating the booming data center spending, helping fuel a long-awaited turnaround. We're seeing a bit of an impact on tech stocks today, though. SK Hynix weaker, Samsung Electronics down as well. We've got the sidecar activated in Korea again. That's 4 days out of 5 this week. Also, TSMC down 2.3%. That's having a broader drag on the TAIEX as well. TSMC so huge on that index. The Taiwan exchange is off about 2.5% at the moment. All right, for more on this, let's get to Executive Editor for Technology, Tom Giles. So, Tom, just want to start with those Intel numbers. Revenue, sales forecasts really crushed it. What were the highlights there?
Yeah, I want to focus on 3 things with Intel. One is the fact that people are building data centers. You might have heard they're spending hundreds of billions on data centers, and they need Intel's server chips in order to make that happen. You're seeing the fruits of that effort, that global effort. Intel is benefiting. Investors took a lot of encouragement from those data center server chip numbers. That is the first and foremost thing that you have to take away from Intel's results. Secondly, they had previously talked about cutting back on CapEx. Now the CFO came out and said we're actually going to increase that. That was also encouraging. The third thing I want to emphasize is that Intel wants to be a foundry. What that means is it wants to take your orders to manufacture chips in much the same way TSMC does, for example. Samsung also manufactures chips. Intel wants to get back and get deeper into the business of actually manufacturing the semiconductors on behalf of other chip makers, chip designers, if you will. They said they put out some bullish comments about that. They talked about improving their methods of production. That's also an encouragement. These are the areas where Intel needs to improve, especially at a time when NVIDIA continues to be the leader in the AI-specific types of chips where Intel hasn't been quite as effective.
Well, what are the implications here for some of Intel's Asia suppliers? Because as I mentioned there, we've got Lasertec, SK Hynix, Samsung, TSMC all having a pretty rough ride. What's this say about the future for them?
Yeah, well, I mean, the fact of the matter is that the underlying fundamentals of the business remain fairly good for chip makers in general. The market volatility that you're seeing might have something to do with the conflict in the Middle East. The fact of the matter is that we're not over the memory chip crunch that we've been talking about and seeing so much evidence of. We're not at a place where we can say that's over. We're not at a place where we can say that demand for SK Hynix, Micron, Samsung is at a place where we need to worry too much. So I'm personally not overly focused on today's declines. Even Intel, which again put out these really bullish numbers and forecasts, they had a big pop in after-hours trading, but they gave up a lot of those gains. So it's hard to say what's going to happen when the markets open on Friday in the U.S. Again, I think this is where you see geopolitics weighing on the market.
All right, Bloomberg Executive Editor for Technology, Tom Giles, thank you. Still to come, Brent crude holding above $100 a barrel. That's reigniting inflation concerns and adding fresh pressure on global markets. We'll speak with Sparta Commodities June Goh about the widening Middle East conflict and where energy prices could head next. This is Bloomberg. Welcome back. You're watching Insight. Let's take a look at how markets are tracking at the moment. It's a bit of a down day across the Asia Pacific. A lot of red on the screen there. It's tech stocks which are bearing the brunt of the selling. We've got the Nikkei futures at the moment down 2.8%, but the Nikkei last traded somewhat lower, off about a little bit more than 2% there. We take a look at the Kospi though. The sidecar activated again, as I mentioned. That's 4 days out of 5 now. I've lost count for the month, but it's a lot. Those big names, SK Hynix, Samsung Electronics, weaker. Samsung in its case down by more than 8%. TSMC weaker in Taiwan as well, and that's weighing on the index as a whole. And we've got the US 10-year above 4.7. That's the highest it has been in 2026. Inflation concerns mounting again, and yet you guessed it, save the best till last. That one green square on the bottom left, Brent crude above $100 a barrel. President Trump saying he's considering a massive attack on Iran. His words, says he'll hold Iran responsible for acts of the Houthi rebels, which are threatening shipping in the Red Sea. Meanwhile, there's been 13 consecutive nights now of attacks on Iran. Well, let's get more on the oil markets now with our next guest, whose expertise lies in oil refining, trading and supply strategy as well. Joining us from Singapore, June Goh, Senior Oil Market Analyst at Sparta Commodities. And June, thanks so much for joining us today. I've got to ask the obvious question first. How much higher can these prices go? And do you kind of have a range of scenarios in mind when you're thinking about that question?
Well, how high can it go? We can look back at the highest point it has been, which is $147 per barrel back at the 2008 crisis. But just thinking from a perspective, the scenarios that you mentioned, right? We have been saying since the start of the war that we are facing the most significant supply shock in oil in history. And we did not see that kind of price elevation in the previous round of Strait of Hormuz closure. But now here we are, almost 5 months later, and with another strait potentially closed as well. So the impact overall to oil markets is really significant. We have definitely lost at least 1 billion barrels of oil inventory, and that should come out quite quickly in the oil prices going upwards if we do not see any normalization of the flows anytime soon.
In terms of the Red Sea potentially being threatened by Houthi rebels based in Yemen, how does their ability to disrupt shipping compare with the ability of Iran to pretty much shut the Strait of Hormuz?
The Houthis have demonstrated that they have the capability of shutting traffic, almost to say, at the Red Sea. It's not, they have done it before. And therefore, the scenario today, they have already attacked 2 Saudi tankers yesterday, and that gives out the strong message to the market. We are here to attack again, together with Iran, as you know, to support them in this war effort. And I think, therefore, we are seeing all the shippers very wary of traveling through now both the Strait of Hormuz and also via the Bab al-Mandeb Strait. So that leaves very little options for evacuation of oil from the Middle East, particularly for the Saudi crudes. It has now got to flow up via the Red Sea into the Suez Canal to come to Asia.
Yeah, and then around the bottom of Africa. I mean, that's the long way around, all right. How cost effective is a plan like this, and where do oil prices need to be to make that a viable proposition?
How long? Well, it's going to take about additional 30 days to make the transit from Suez Canal, go around the Cape of Good Hope, and come into Asia. And it will basically add to freight costs. So how much does oil need to react to this, right? Essentially, number one, freight has to go up first. Secondly, in terms of oil, we need to see a suppression of demand in order to balance the supply shock that we are seeing. Again, the oil element it comes as a retail product in a way. It should come into effect in terms of diesel prices, gasoline prices being significantly higher than crude prices in order to curb the overall demand picture where we are.
Well, during this whole experience, we've often seen China described as a swing importer, quietly building its inventories. How do you see China's role in oil markets evolving as this conflict drags on?
Before the conflict, they were the swing demand for oil, right? They basically, when oil price was very low, and there was, I would say, a glut in the market, China was there to buy for strategic stockpile. In the current crisis, they are doing the inverse. They are now not buying crude as much as they were, to the tune of 5 million barrels per day. And they are basically curbing their own import and even to some point reselling some of the crude they have into the market. And that's created a big stabilization point in where oil prices could have been in the last few months. So at this point of time, based on all the indications we are seeing, they are not likely still to come back into the market to buy more crude oil at this current price level and this geopolitical flare-up. They have their options, which includes Russian oil, Iranian oil, and also their own strategic petroleum reserves drawdown, and whatever else that they can do in terms of demand diversification from oil supply. For example, instead of using naphtha for chemicals, they are now using coal to olefins in order to continue to provide for their downstream chemical sector.
June, we've got about 1 minute left, but I'm just curious, with your experience in the refining side of the business, how do you see Asia's refiners adapting? Because they rely most on flows through the Middle East. What's your outlook for them?
So far, Asia has done a really good job in diversifying crude sources since the onset of the crisis. Aside from buying a lot of US crudes as alternatives, we've seen obviously the Russian barrels going into India and China. Even Indonesia has now received a cargo as part of the 150 million barrels of agreement of crude deal from Russia. And I think there's also a lot more SPR that Japan and Korea can tap on. Having said that, we are still very dependent on the Middle East crudes. So Murban and Oman, for example, they are the two grades that can load out of the Middle East without going through the Strait of Hormuz or the Bab al-Mandeb Strait, and therefore they are commanding a huge premium right now in the market due to the stronger bidding.
All right, June Goh, thank you so much for your time today. June is Senior Oil Market Analyst at Sparta Commodities. Coming up, we're going to speak exclusively with Cambodia's Deputy Prime Minister about foreign investment, manufacturing, and the country's role in shifting supply chains. We'll be live in Phnom Penh next. This is Bloomberg. Welcome back. You're watching Insight. Cambodia's Prime Minister is urging Thailand to immediately resume talks on their border dispute so more than 20,000 displaced citizens can return home. Thailand says Cambodia's pursuit of a UN conciliation process on a decades-old maritime disagreement justifies suspending negotiations. But Hun Manet told us exclusively he thinks that position is inaccurate and unfair.
I heard the Thai leadership, especially foreign ministers of Thailand, has stated that because Cambodia go to UN clause that closed the door for the land boundary. This statement, I like to say, a little bit inaccurate and a little bit unfair. based on two reasons. One, the reason why we go to the UN clause compulsory conciliation is because Thailand has decided to cancel the only existing bilateral agreement between Cambodia and Thailand on maritime, MOU 2001, which for 16 years, for 15 years, that both Cambodia and various Thai government, about 13, over 10 governments, have continued to try to work based on that, try to find solution, including two previous prime ministers of Thailand, Prime Minister Sita Thavisin and Prime Minister Ung Eng, during my time, that we work and try to find solution to the joint development and other areas. But unfortunately, after our warning, our request that Thailand not to cancel the MOU 2001, Thailand government continued to cancel anyway. So we have no choice but to go to the conciliation. Second, there's no conditions, no agreement or anything before.
There also seems to be misalignment between Thailand and Cambodia on what the UN talks should focus on. Thailand wants to focus and discuss the redrawing of maritime boundaries,
yes,
while Cambodia wants to focus on the joint development of these overlapping areas. As a gesture of goodwill, might Cambodia consider confining the scope of discussions to a resolution on maritime boundaries?
I think this point is too early. We need to go on, agree on the process of appointing the judge. Now we are working on the chairman. We have nominated two of the judges each side, and we need the chairman of the judge, the fifth judge. And we're still working on that.
So confining the scope of discussion for now is not something Cambodia would consider?
It's not something that we have posed over two proposal for delimitation and the delimitation and also the joint development area for the decisions. But like I say, for now at this stage, let's focus on getting the process moving.
Cambodian Prime Minister Hun Manet there, speaking exclusively to Bloomberg's Avril Hong. And Avril joins us live now from Phnom Penh, where she's standing by with another senior member of the Cambodian government. Avril.
That's right, Paul. Joining us now exclusively is Cambodian Deputy Prime Minister Sun Chanthol. Deputy Prime Minister, really good to have you with us. I have to say I was really looking forward to speaking with you because you were the leading negotiator last year, helping to bring 40+% Cambodian tariffs hit from the US down to roughly 19%. Today we are hearing 10% based on the forced labor 301 component, but the access capacity part, that one is still a question mark. What's the state of play?
Well, we're very pleased with the rate that we received today regarding Section 301 on forced labor. So the rate ranged between 10% to 12.5%, but Cambodia received the 10%. We are waiting for the second component, the excess capacity. So we hope and we expect that rate will be not higher than 9%. So the two components, the forced labor and excess capacity, add up to around 90% or less than 90% as what we agree on the agreement on reciprocal trade with the United States, which Cambodia was the first country in the world to sign the ART with the US on the 26th October of last year, when President Trump witnessed the signing of peace accord between Cambodia and Thailand in Kuala Lumpur. Right after that, he signed the ART with our Prime Minister.
So you hope, but how confident are you that the excess capacity component will eventually be less than 9%, and how much less do you think?
I expect that we will not be more than 9% because US will honor.
But is it 2%, 3%, or something like 8%?
I would probably range, close to the 9%.
Okay.
Because we want USTR want us to have the rate in the same landing zone within our competitor in ASEAN. And that is a commitment. USTR committed to honor what they signed with us, and we are committed to honor what we signed with the United States.
Okay.
Right.
What about what the U.S. has been asking for in return? I mean, I spoke to the Commerce Minister earlier. There are some, things that the U.S. is asking for in return for these exemptions. What more can you share with us on this?
Well, first, we zero out all the tariff for the imports from the U.S. to Cambodia. To the certain commitment, country-specific commitment that we agree with the United States. For example, on environment. So we have to enforce our law on the environment to ensure that there's not illegal logging and so on and so forth. We committed to reduce or to eliminate the non-tariff barrier. For example, SPS, sanitary, phytosanitary, if the products are approved by U.S. agency, U.S. SDA, or FDA, we don't have to redo the testing. If the drug is being approved by FDA, we do not have to redo testing in Cambodia.
What about what it is asking Cambodia to do in terms of imports of raw materials? Is that something that is on the cards as well?
Well, if Cambodia can import cotton from the U.S., for example, to make it to fabric, we likely to benefit from what we call TRQ for 3 years, maybe the lower tariff or zero tariff on that for 3 years. So we will look into that to import the cotton from the United States to make it fabric. So we will go upstream. So we will benefit from that. In addition to that, by having signed the ART with the United States, there's certain products in the list that U.S. provide to us that qualify for zero tariff. So we'll be pay only MFN plus zero AOL. But outside of that, we pay MFN plus a 10% as of today, until the excess capacity will come to play in a few months' time.
What about SEZs and how, there's talk that there's one for U.S. cotton. Is that something that Cambodia is considering at all?
We have not heavily designated SEZ to import the cotton and to produce to fabric. Special economic zone in Cambodia is for every manufacturing activity. We have 39 SEZ in the country. We approved 63, but 39 are in operation and produce various goods.
So not considering one for U.S. cotton?
We have not designated a special economic zone for U.S. cotton import. Right.
Okay. And not considering in the pipeline, that's not something that is being looked at?
That is depend on the private sector. We will allow if the private sector, if your company or any company or investor want to invest in a special economic zone dedicated to producing fabric, we'd be more than happy to look into that.
Okay. What is the longer term vision for Cambodia's special economic zones? Because you have dozens of them. I think 39 in operation. And then 60 in total.
63 has been approved, but 39 in operation. And so we expect that they will continue, the remaining will build the special economic zone so we can attract more the FDI into the country. But the FDI into the country does not necessarily have to go to the special economic zone. They receive the same benefit. Our investment law is the most liberal investment law in ASEAN. We provide up to 9 years tax holiday. We allow 100% ownership of a foreign investor in Cambodia. Every economic sector in Cambodia is open to a foreign investor. There's no exchange control in Cambodia.
That is very attractive, I have to say. But what about the governance issues within the country and how maybe this scam crackdown, is that also affecting investments into Cambodia?
Our Prime Minister called the scam center a black economy
Right.
Black economy does not produce any good benefit to our economy. On the contrary, it affects our ability to attract a good investor. It affects our ability to attract tourists to visit our country. But our Prime Minister is so committed, our government committed and determined to eradicate the online scam.
So given how there seems to be headway in cracking down on scam compounds or criminal networks, do you see that already yet in the numbers in terms of maybe more encouraging signs from foreign direct investment into Cambodia?
Well, I just came back from the investment roadshow in Japan, in Korea, in China recently. And when I informed them that we have a total commitment to eradicate the online scam, and they also read the newspaper, they feel more confident.
And they're committing money?
Right.
Okay.
They feel confident to consider to invest in Cambodia. Now, if we look at the numbers, in 2024, we approved 414 projects worth $6.9 billion. 2025, we approved 630 projects worth $10 billion. So that 50% increase in terms of number of projects that we approve, 45% increase in the total commitment. For the first 6 months of this year, we are approved 276 projects with $4.7 billion. So we roughly 50% what we approved in 2025. So I hope to be able to attract more investment from now until the end of the year. But having said that, the war in the Middle East also has some impact on our investment, not only Cambodia, but in the whole world, as it's the whole region, the whole world that we are affected by the impact on the war.
How much are those investments coming from China? Can you give a breakdown of the proportion, and also how actively you are courting other investors beyond China?
In 2024, 49%.
That's a lot.
Right?
That's half.
And then go to 54% in 2025. But the first 6 months of this year, it dropped to 35%.
Why?
But we have all the investors that invest in Cambodia.
Okay.
But having said that, our investment law does not discriminate against any investor. We encourage every investor to consider investing in Cambodia because of our pro-business government, our young, dynamic workforce, our infrastructure. We want Cambodia to be a center for manufacturing and for logistics for ASEAN.
On infrastructure, the $1.7 billion Funan Techo Canal, that's your pet project. We've recently gotten confirmation, you confirmed to Bloomberg on a loan agreement with China. How much is that loan? What are the conditions involved? What will that loan be used for?
We get approval from China for $200 million loan to build the ship lock and irrigation in the canal itself, around $200 million. The term is very good, 1.25% interest rate, 20 years loan period. That for that ship lock. In addition to that, China will grant $200 million to build 6 or 7 bridges crossing the canal. In addition to that, the syndicate loan in China will provide up close to $1 billion to the concessionaire to build the canal. And this canal is a game changer for the inland waterway transport in Cambodia. We'd like to shift from a land transport to the inland waterway transport in order to reduce road damage, road accident, also reduce the shipping cost, the time, and reduce CO2 into the environment because of the canal.
Is it going to be a game changer for Vietnam, though? Because there are concerns that with this canal, it could bypass Vietnam's ports and waterways. Is that something that you've had discussions with Vietnam about?
It's not necessarily correct because the shipment still, some shipment still go to Vietnam. Some go through our Sihanouk port. So what we do is to make the environment where Cambodia can grow, make the pie bigger, so everybody can benefit from that pie.
So to the extent that you're not worried with the building of this canal, that it could in some way undercut the economic or even the security relationship that you have with
Not
the
at
neighbor?
all. On the contrary, is to expand the cooperation between our neighboring country.
Okay. Talk to us as well about the longer term vision when it comes to attracting investments. I mean, you talk about these near-term challenges.
Okay. We had the vision of becoming the higher income country by 2050. So with that, we need to diversify our economy to electronic, to automotive industry, food processing industry, to shift away from labor-intensive industry. That what is our vision.
Deputy Prime Minister, it's great to have you on the show. Thank you so much for taking the time. Fantastic to speak with you.
Thank you very much.
Let's do this again soon.
Thank you.
Cambodian Deputy Prime Minister Sun Chanthol with me here. Back to you, Paul.
All right, thanks, Avril. That's Bloomberg's Avril Hong there live in Phnom Penh. Right, let's take a look at the market open in India. We're having a bit of a down day across the Asia Pacific. We've also got a very weak rupee in India as well, not helped along by a surging oil price. We've got the Sensex off by 0.8% at the moment. And that's pretty much the story across the board. We did have news a little bit earlier that the RBI had sold surplus dollars in offshore markets to support the rupee. That is maybe what we're seeing here at the moment. A couple of stocks there on your screen at the moment that we're also watching. Infosys, its net income was up 12% on year when it reported earnings. That was a slight miss, supported though by that weak rupee. It's trimming its revenue forecast for the full year. Interglobe Aviation, meanwhile, that's off almost about 0.9%. This is the operator of the low-cost airline Indigo, posting an unexpected loss for the second straight quarter. Revenue was up 20%. Fuel costs, though, predictably up 86% on year to be exact. Now, Indian Prime Minister Narendra Modi has made a fresh bid to calm mounting anger over examination paper leaks as students prepare for nationwide protests on Friday. He's posted a rare video message on his X account saying the leaks are not a trivial matter and extremely painful for many students and their families. The video address came as crowds continue to swell around the main protest site in New Delhi, led by a group known as the Cockroach Janta Party.
Fast-track court.
The departments have worked hard and gave me a draft legislation late in the night. The draft legislation has provisions for fast-track courts and harsh punishment. It will be discussed in the cabinet, and after taking suggestions from them, a final version will be ready. And on Monday, when the session starts, we will try to get the bill passed as quickly as possible.
Let's go to Mumbai for more on this. Bloomberg senior India editor Menika Doshi joining us. So, Menika, considering that Narendra Modi put out that message at about midnight, it does seem that the protesters might have shaken his confidence a little.
Well, it does seem like that. The Prime Minister finally broke his silence yesterday after days of tens of thousands of students gathering in the streets of Delhi and then on the streets of many other cities across India. But the commentary from the Prime Minister, empathetic but also perfunctory. He has not directly addressed the protesters' demands, but he has spoken of working to bring to justice quickly those found guilty of leaking exam papers, and also speaking to exam stress and education policy in the country. This is not a sign that the protesters are going to back down. In fact, so far we've heard that the protests continue. And what a week it has been, Paul. A week that is a reminder of what democratic dissent means, but that has also raised questions around the economy, because really at the heart of these protests are economic opportunities that are lacking for young people in India. To talk about the implications of this long protest, this student protest, I'm joined by Rahul Verma, fellow at the Center for Policy Research. Rahul, it's been many days of watching students from across different castes, classes, religions, and aspects of society come together in this rather spontaneous fashion to protest not just the examination system, but now a wide range of issues. What stood out the most for you in these past few days?
Inka, for having me first. I think there are a couple of things we need to watch out. First point is that in last 12 years of Modi government, we have seen multiple protests. So every 2 or 3 years, this government has seen big mobilization. But what is different this time is that in previous iterations of protests, those were all either on policy differences or on ideological sort of like differences. And so every time the government had a counter narrative or counter offensive to deal with the protest. The second, and so this protest is different because it is about administrative failure, about the promise of the state to millions of youth across the country that there will be fair reward of the examination system. So that is not being met. This sort of like, so Cockroach Janata Party, which was formed on Instagram, it's in some ways, like for 2 to 3 weeks, did not attract any attention. They had called for a march towards the parliament on July 20th, Monday this week. And it is then when we start seeing outpouring of not just students, but their parents and people from across many segments to come and join this anxiety that you rightly pointed out. In some ways, India's youth are not able to see their paths of upward mobility. Competitive exams and exams for systems of higher education remain one of the surest way of upward mobility in a country like India. And if that gets blocked because of examination leaks or other kind of administrative failures, you are bound to see this kind of frustration. And in last 6 to 8 years, we have seen more than 2 examination paper leaks.
Well, Rahul, how do you see this shaping Indian politics over the near and medium term? Everyone I speak to expects it will have no impact on, let's say, the next upcoming election in Uttar Pradesh. But it could reshape both how the opposition takes up important issues, but also how the government sees its own accountability.
Menika, I think the reading about this movement may not have any kind of electoral impact is based on this idea that in past 12 years, the government has seen many protests, but every time it was able to overcome them. And electorally, it didn't make any big dent on their prospects. But I think this movement is different, largely because of the sociology of the protest. A large number of people who are protesting are basically middle classes, upper caste, people who would have usually voted for the BJP. And so in some ways, this is the first big protest that BJP is seeing, which is coming from their own constituency. So that's one. 2, I think all protests at some points to reach a tipping point or cross a threshold. So it may not have like a big impact, say, in UP elections or Gujarat elections next year. But over time, all of these things will start building up. What we must remember that this protest has come at a time when the government is facing headwinds on a lot of other things. For example, there have been allegations of corruptions and theft in the Ram Temple complex. So there is a religious issue involved. There have been allegations of BJP leaders basically helping their relatives in land deals and other kind of things. So there is question of corruption and propriety involved. The international environment has become difficult. Oil prices have shot up, so inflation is shooting up. Economic anxiety is building up. So the reason why this protest may have impact on even electoral outcomes, not because of the protest alone, but because this on examination, but this protest is in some ways is able to attract the anxieties and frustrations on many other things as well. And also because it comes from BJP's own core constituency.
All right, Rahul, quick, final, short response. to what this means for Prime Minister Modi's popularity, his unprecedented, undented popularity for almost 12 years, with the brief impact of the last election. But here are young students on the streets of Mumbai, pointing a finger directly at him.
So brief response would be, I think Prime Minister Modi continues to remain very, very popular. This moment presents another opportunity for him to renew his sort of like popularity in that sense, and renew his legitimacy in that sense. In 2024, BJP did suffer some losses, and there is an opportunity here. If the government does not engages with the protest in the right manner, it might dent their popularity.
Rahul, deeply appreciate you joining us this morning. Thank you very much. And with that, it's back to you, Paul.
Thank you, Menaka, for having me.
All right, that's Bloomberg's Menaka Doshi there in Mumbai. And that is it for Insight. Thanks for joining us. We do have Horizons Middle East and Africa up next. Keep it here with us. This is Bloomberg.